You are looking live. Welcome to Math Makes Money, where my AI robot, I should say Nick and my AI robot, is going to trade $2.5 million worth of SPX 0 DTE. We're going to trade Crazy Ivans. Nick is going to tell us all about the market and all about his trading. Yeah. Nick Battista, how are you, sir, today? And how is your trading? What are you looking for today?
Good morning, sir. It'll be interesting to see if we can get back on track with the SPX. Last week was a great week. It started off slow yesterday, had a tough day yesterday, but not as bad as we thought it was going to be middle of the day, which was good. We got a little bit back towards the end of the session there. So it'll be good to see if we can get back on track here. What am I looking for today? I mean, yesterday was one of the choppier days we've had. Low volume, zero volatility. It felt like a vacation. I saw some stats that it was the lowest volume day since the Christmas time of 2025. I saw something about SPY share volume being about 25 to 30% less than it has been on average. And you could really tell with just the way the market was moving. We had that one little blip in the middle of the day where we moved about 15 handles. And for the rest of the session, we sat in like a 5-point range. It was absolutely nothing. There was 800,000 contracts that traded on the E-minis yesterday, which is exceptionally low volume. We're starting the session off up 13 here. I mean, you can even see like when you have to zoom in real nicely to get to these candles. I mean, this is 30, 40 point range this entire last 4 or 5 sessions here. And yesterday was very, very tight. NASDAQ up 100 here. It's been the strongest of the group today, and Dow up 87. You got the Russell up 8. I think the real story of the overnight session was the move in oil. Oil got up to like 85-ish, and then we had that reminiscent of the kid that was the ship tracker. We now have the Pakistani source.
What?
That came, you remember we had like a month or two ago, it was really on the big move. I should say probably around here, and into the first real smashing of oil and oil volatility. But you had the Pakistani source that was mediating between Iran and US.
Yeah.
You remember that. And we had that come back overnight today. Oil hit 85, which has 80 has been like the perfect zone for oil. The 85 handle has been kind of like that's kind of when the tweets start to come, like where, the deal's on the table. Like the 85 to 75 is like the range where nothing really happens war wise.
Yeah. When
you get below 70, things start to ramp, or 75, things start to ramp up. When you get above 85, you get the tweets that are like, oh, it's on the table. We're there, it's close. So we had that overnight, and the Pakistani source came out via Axios, of course, which is our number one news source now, apparently. And everything's fine. So we've got oil at 81 and change here. It's reversed, $3 or $4 from the overnight session. I have been keying in on volatility a little bit. Volatility futures here at 1691. The VIX itself closed at 1553 yesterday. Volatility has been super, super low, despite some of the craziness that we've seen underneath the surface. You got the bonds up 6 right now. They're in the 108 handle in the overnight session. Gold and silver have quietly had a very nice rally. Gold here at 44.50. You have silver down about 18 cents here at 65, but has had a $6 or $7 rally. So it's been a little. My gut feeling says that we're due for a little bit of a pullback, but it's just so low. You can't short a dull market. You just can't short this market right now because there's nothing happening.
There's nowhere.
You got rid of the earnings are over with. We got through that session. You got CPI and PPI to this week, which is something to care about. But those numbers, I think we all know that they're, they are what they are. I don't know if anybody's really keying in on those to get any real world application out of them. But it seems too quiet. Everything seems so quiet right now.
It's really a super time, by the way, to be selling 0 DT SPX. You would think, but yesterday we lost 15, 16 grand. because of one. I still don't even understand what it was. At 1232, there was a gigantic move to the downside. Everything got pushed out on the put side, and we were heavy to the put side. So, Phil, said, "What the heck, man?"
Yeah.
I think I was out surfing at the time, or no, surf was terrible yesterday. So I was out swimming. I had gone out in the ocean. I came back and checked my little, super duper watch. It tells you the stocks, and it said, not so bueno. But, so we lost like 30 million. We lost 30 grand.
That would be a rough day.
That's a rough day. We lost 32 grand in literally 1 minute. And then Phil, the robot, just, he worked it all the way back and came up to 15 grand. I was the happiest guy in the world at losing 15 grand yesterday. But Phil is doing great as usual. Today is day 204.
And Rob, that's well within the normal. 15 grand is, of course, it's a lot of money, but
it is.
From the 50K in either direction is our usual, standard deviation. So a 15K day is right there.
Right. 2%. That's what
2%.
When I used to be a professional gambler I was never a gambler. I was a mathematician in a casino until they invited me to leave twice. And once when I was, paying for law school. And then I retired at age 42 because of my internet company. And I went back in there for 3 years. On my tax return, I was a professional gambler. It said they don't have mathematician, by the way, on the IRS. So they call it a gambler, but they invited me to leave. And the reason was that we had a positive expected value. That's all it was. It was just math makes money. That's why our website is Math Makes Money, not because it's just a great slogan, but it's the truth. CPI doesn't make money. Charts don't make money. In my experience, what makes money is math. And we have a 53 to 50 to 47%, right in that range. So 6% is the spread. When I was playing cards, it was a 0.5% either way. So a total of 1%.
But the thing is that's just win rate. That's not capture rate.
No, that's not capture rate. The capture rate is right around
higher than that.
A little bit. It's a little between 5 and 10, but it's also small, right? It's not like you bet $1,000 and win $1,000. You bet $1,000 and you capture $50, right? So, but 2% is the key. My number one statistic. People always ask me, how much money did you make? I said, I don't know. Well, what's your rate of return? I don't know. And I don't care, right? Because I know I have a positive expected value. So if you ask me how I did in 1 day, 1 week, 1 month, even 1 quarter, maybe 1 quarter, I'll be looking at it. But what I always look at is how much money did I lose in any day, right? I never want to lose more than 2%. So people always ask me, how much should I gamble? How much should I gamble? I say, how much do you have? They say, I'm coming to the casino with 10 grand. Okay, and how much are you going to bet? I'm going to bet $1,000 a hand. Well, I said, that's a good way to lose all your money, and the casino will love you. They'll probably give you a free room board, R&B, room, food, and bar. But what you ought to do with that $10,000 is divide it by 100, right? And that's $100. So is that right? $100? I think that's $100. Is that right? Let's do the math. Yes, it is.
15 grand or 10 grand? 10 grand.
10 grand. Make the math easy. I went to private school, which means education was not quite as good. So at my private school, they helped me with the math. So at any rate, so that's $100. So I say your bet should be $100. And they say, wow, $100. Yeah, if I have $1,000, what should my bet be? $10. $10 is not. It's not even exciting. I said, well, if you want excitement, just go to the roulette table and put it all on red. Just spin it one time. I always tell people, if you really want to just gamble, just take all the money you're willing that you have that you want to bet, put it on red for 1 spin, and either you lose and you just go home, or you win and you stop gambling and you have a great time for 3 days. Right? It's all paid for because you won it all. You doubled your money.
I had a friend that would do that. I had a friend that would take his whole bankroll, and the first thing he would do when we went into the casino was put it all on black, the whole thing. And if he hit it, he would go bet. If he didn't, he'd go straight to the bar and just sit at the bar and hang out.
Yeah, it's great.
So it's just like he would take the whole winnings, he doubled up. He would take the double, the portion that he won and go gamble. And then, he was one of those guys that I feel like there's a type of person that has casino luck. Like he's the guy that would go in there, just put it down, hit it every single time and just go straight to blackjack or poker room or whatever. And just have, double the bankroll. He's just one of those guys.
I guarantee you that he will win exactly 49.5% of the time.
Yeah.
But you got to try a lot of times, right? It's a Benellian curve. You got to do it a lot of times in order to get that curve. So when people say, how much money do you win? Don't know. I can tell you how much money I didn't lose. I didn't lose more than 2%. Normally I would tell other people 1%, but I'm not playing with all my money. So, I'm willing, I have my risk tolerance is a little bit higher. So my risk tolerance is 2%. You decide what your risk tolerance is. Yeah. So at 2%, that means, Nick, I could lose 15 days in a row and I'd only be down 30%. And my biggest losing streak is 4 days. When I'm combining SPX and 0DT, it's 5 days of just 0DT. So that's another thing I track is, how long since all-time high and what's my max drawdown. But 2%. So you just take in this account that we're trading right now, it's got about 3.1 million in it. We're holding back 600,000 to trade the Crazy Ivans. That leaves about $2.5 million. So we just said it, and we said, Phil, every morning we say, okay, max loss today is 50 grand. That means my max win is going to be right around it. So that's going to be, let's call that the 47%, right? Because it's 53, 47. So my max win is going to be right around 55 grand. So I'm going to be somewhere between 50 down and 55 up every day. Yeah. Then you can run a curve check on that, and you see the median where 68% of the time, in a bell curve, where you're going to be plus or minus 25, 30 grand. That's where you're going to be. And around my family and my house, I have sort of desensitized Maria and Tyler to that. I've had to step them up slowly but surely. At first it was $5,000. Oh my God, this guy is falling.
If it wasn't working, it'd be a lot harder to step them up.
Yeah, but it always works, right? It always works. And people are like, how can it always? Rob, I want to trade like you. I want to live like you do. You can just go surfing and sitting around the pool all day long. You don't watch the screens like Maria and Tyler? No, I don't. Do you know what the CPI and the BPI and the SLP and the blah, 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 blah? No, I don't.
My BMI is getting a little too big.
Whatever. I talked to AI last night about cinnamon. I talked about cinnamon and turmeric, and last night, taking the steam, by the way, don't give me. Okay, Maria told me, as she does every morning, when you get on the show today, focus. Look into my eyes. I want you to focus.
No, it's okay. I can keep you in check.
You got to keep me in check.
It's tough.
Time check. Speaking of check, time check. Where's my clock?
Yeah. We do have a number of questions in the chat that we will get to.
All right, let's go.
Questions. We do have the market open in a moment. We can tee some of these up, though. This is a good one just about, just Rob, you're trading normally iron condors, or you do iron condors basically every single day. Why not just do put spreads with the market in general having an upward bias? I will say to put my 2 cents on it, the SPX trade is really a market neutral short volatility trade. So it's less about the upward bias, the drift of markets, which is usually over duration. You can't really say there's a drift on a 1 day time frame because it really is 50-50. At 53.47, it's a slight drift, but that's over time, and that's why markets compound higher. And that plays into the Crazy Ivans. So the Crazy Ivans take advantage of that positive drift that you typically see, whereas the SPX trade on a day-to-day basis is really just short fear. It is saying fear is overstated no matter what is happening, and that's really the trade.
And it is a great question, Lee Mariotti. What I do, just so you know, is I back test everything. So people come to me all the time, Rob, what about this trade? What about this trade? Okay. I've been doing this a long, long time. And what I discovered is what the New York Jets coach told me a long time ago when they asked him about this number one draft pick, is he going to be a great quarterback? He said, let me tell you 3 things I can tell you about this quarterback. Okay. Is he going to be good? I don't know. I can't know, and I'll never know. And the same thing applies. You don't know how that kid's going to do. You can't know how he's going to do, and you'll never know because it's the future. Nobody can predict. Ding, ding, ding. Here we go. Let's go. Time check. Nick, talk me through the market. These are my news sheets. I've got multiple accounts, and I want to show you all the accounts.
You want me to stay on you?
933, we're going to go. 937, we're going to go. 940, 942, 943, a bunch. 950, and then 1057.
You can't give it all away, Rob. You can't give all. Well,
I'm not telling them what they are. I'm not telling. You want to find out? You want to trade like me? Go to mathmakesmoney.com. Sign up for Maria's newsletter. Very funny this morning. She's got a lot of great picks. She makes a fortune. She is a different type of trader than me. I used to say better, but I'm told not to say that.
Different. Nobody's better than anybody else, okay?
Nobody's better than anybody else.
It's all different.
I'll take my results. I'll take the Pepsi challenge against anybody. They're posted at mathmakesmoney.com. You can see every single trade that I've made, or most of them, every single day. And what I do know is that it's math that makes money. I'm a mathematics trader, so I back test it. So the answer to your question is because the back testing tells me I do better by doing both sides, right? But remember, you don't know what the market's going to do. You can't know, and you'll never know. I can't tell you how many times I've said it's for sure going to go up and it goes down, right?
Yes.
A buddy of mine, a professional gambler, he said, I've lost gambling on baseball all my life. So he started a website called Opposite Bets. He said, all I do is I say, the Yankees are way better. This pitcher's 100 times better. I'm definitely taking the Yankees. And then he bet on the Red Sox because he said, I'm just going to take the other side because I've lost consistently.
Yeah. And
so all you got to do is take the other side.
Those bets are 50-50 either way.
They're
50-50. You lose 10% every time.
That's called the big, and that's why those casinos are so big. Yeah. I would tell you, I am so happy to be selling options because now I'm in the casino business. Yes. I own the casino, and it is awesome.
All right, let me give a quick little market update. So the E-mini's up 5. You got the NASDAQ up 30. Another choppy little open here, very inside the expected move here. Oil down 48. You got volatility futures basically unchanged. Actually just ticked up slightly, just under 17. You got the bonds up 8.
Time check.
Silver. Time check. We can get back to you. I was going to say, Maria with her Rocket Lab is down, a couple bucks here, very much inside the expected move. So kind of a nothing move there. We'll jump over to you to see what we got going on.
We got time check. We have 40 seconds to go. Phil now is doing some really cool stuff. He is randomizing the exact moment he comes in. So if you want to follow me, even if I tell you that we're going at 9:33, you don't know because he randomizes it by the second. He now trades by the second, and we're at 9:32 and 40 seconds, and we are coming into the zone. I don't know which account he's going to be trading on. Let's bring up the activity on both sides. And these are the SPX orders. Let's see what he's going to fill. I got a couple coming in at 9:33. I think they're going to be over here on this one, but I'm not 100% sure. Let's see what he does any second now. We are getting ready. Right down. I can't, when I put there it is. Here he comes, Phil.
There we go.
You know what? Why did I not hear it? Why did not? Oh, because it didn't get a fill yet. Or did he get a fill? Nope. Working orders.
You should get the little.
There it is. Yep, there it is.
There you go.
There you go. So Phil's got some fills and still working some orders. Hang on here. Phil's asking for 505. They're offering him $5. He won't take it. Now he's asking 5. They're asking 487. There he got 5. How about that? Phil hung in there. And what Phil does is he puts out these trades, and then every 2 seconds he organizes these trades. On the outside, on the going out, he does some crazy stuff to save his bacon. He has really come up with some new exit plans. There's a lot of people that rest their trades, including me, that used to rest them at the CBOE. We no longer do that. And thank goodness we don't. Last Wednesday and yesterday, we would have lost a lot more money, but Phil is all over his game. And that's why I love this. I love this business because all the advice I give you has the lifespan of a banana. It really does. I'm telling you. People say, well, I want to know your trades for this week. No, they're valuable. You need to sign up at mathmakesmoney.com and join our Math Makes Money team. If you're on the Math Makes Money team, you'll see every single trade that I've got, every single trade that we're putting on, Nick and I are putting on in the hedge fund. And it's got one button trading, which is, I guess this is an early announcement where you can push the button.
Soon.
Very soon. You push the button and you will trade exactly like I do. And you can say, I got 10,000, 20,000, 50,000, whatever it is. And doink, 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 just like a sushi bar. It is muy bueno, muy bueno. And you are going to be, they are going to be loving it. You want to trade like me. You want to do exactly, I don't know if you'll get the results like me. I can't guarantee it. Not financial advice. My lawyers, by the way, I talked to my lawyer last night about a whole bunch of stuff. And I said, hey, I talk about you every day. He said, what do you say? Simon Says? I said, oh,
that's good.
His name's Simon. His name is Simon.
Says. I love it.
So I said, that's a bit. That's a bit. Do you mind if I use it? He says, of course I mind. I want a piece. He's a New York lawyer. He's no dummy. He wants a piece. I said, Simon Says, no piece for you.
No way.
And
got Simon enough mouths to feed.
Yeah, Simon Says. So we got a new bit. Nick, I don't know how we're going to work it out, but Simon Says that's the new bit. So, okay. Now we are in the game, and we got to mix.
Let me throw out a couple more questions we got. So Leah, the one that was asking about the positive drift, also saying that they do Crazy Ivans as well. So they're incorporating that into their trading. I love that. That's good. Good morning,
really
Kyle.
Good.
Well, you got more coming on?
No. I said that's great that they're putting on Crazy Ivans. I love it.
Yeah. Steve, the Crazy Ivan, just to give a short summary of what it is, it's essentially just a short put, and it is a short put. That's what the trade is. Somewhere in the 40 to 60 day range, typically. And we put them on around the 10 to 15 delta. Rob likes the 12. Maria goes a little bit further. We use the NASDAQ for those options. So it is leveraged. We try to do like 1 to 2 per 100,000 is kind of where our risk tolerance, we keep that at. We've started doing it in MES as well. It's a short volatility play. Obviously, you got a positive time decay aspect to it as well. Some long delta. And really the mechanics of it are opening when the market is down, when typically the NASDAQ being down about 1%, which is like 300 points. That's usually what we try to set our mark at, and we manage them at 25% of the max profit. When you're trading them, you're typically trading around 200 to 250 points, which at $20 a point is between $4,000 and $5,000 per contract, and we manage them at about $1,000 profit. That's 25% ish of the max profit there. And they generally, there's some more coming on. They generally have a hold time of somewhere between 13 and 14 days.
Correct. That is all correct. You have got it correct, sir. And we are seeing Phil. He's out there working hard. Phil's trying to get a Phil. Where is Phil at? Is he on this one or this one? Where is Phil working today? This is a big mistake. Here we go. Oh, he's over on this one now. Yeah. We are running a bunch of accounts. We are not running the hedge fund yet on the show here. I don't think Simon said we can't do that, but we do have kind of a shadow. It's my account's a bit of a shadow. It's my own personal account. It's not the hedge fund. Okay.
Yes.
It's not, these results that I get are my results. They are not related to the hedge fund. And then we got some other test accounts here. And so you're going to see a multitude of accounts. It's going to be complicated at first, but we got some new cool software coming that's going to show everything. And I can see right now on all accounts, we are up $52.50. Yippee-i-o-ki-yay. How about that?
Yes. My man Clark giving us a shout out here just to hit the like and subscribe button. It does help us immensely. So please do that as well. Lewis asking about SIBO stops. So we are using a algo type stop where it's a little bit more complex than just a resting stop here.
It's extremely complex. And here is the problem. Okay. You, in the old days, and by old days, I mean a year ago, or even 6 months ago, what would happen is if you're a retail trader, the rule at CBOE is first in time, first in right. So, and retail traders go.
And let's explain what that means. So you're the first order that goes in. So if there's 10 orders at the same price, the first one, meaning the first one in the day, gets the first priority of that fill. So no matter what, if those other guys to get filled, the first one, it goes in a line. First one gets in is going to get filled first. And if you put one in 30 days ago, you're in the front of the line. People 30 days ago could have put in a fill, an order for today. That would be, yes. Maybe on like a monthly order, a monthly option or something. 0 day is probably not something that's being played far out in time. But yes, not by me, that's for sure. But there's some people playing to double calendars. What doesn't matter. Doesn't matter. And then the institutional traders are put at the rear, which is great. We love that. We're all retail traders. We love that. And as long as you don't violate the 390 rule, blah, 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 a lot of complications. But suffice to say, 99% of people are retail traders. Yes. So we're first in time, first in right. So now we say we put on our thing for $300 and we say, well, we want to get out at 100% stop loss. So that's at $600. So when the quote is $3, we go in, we sell it for $3. And if we have to buy it back and it costs more than $6 to buy it back, let's just close it out, right? We'll just take the loss and we'll move on and we'll do another one because Rob tells us he's going to win 53% of the time. And so we'll just stop our loss at one. And we win one and lose one, we'll break even. And eventually we know that 60% of the time is going to hit one side or the other. 30% of the time it'll go down the middle and 10% of the time it'll get both. So we'll win 20% of the time. Then commission, slippage and all that, it gis down to 5 to 10% in your capture rate. Yeah. So now what we want to do is we're sitting fat, dumb, and happy. And we're saying, okay,
Now, if we did a limit order, let's say we set a limit order for $6, and let's say in the old days, the market would move slowly. It hits $6, no problem. And the CBOE says it's a market order, and they fill it at 605 or 610 or 620. Maybe you get huge slippage and they fill at 660. Fine. Yeah. We can live with that. We understand. We got enough cushion because we're doing enough trades with Rob that we know 53.47. It'll work out. Our capture rate will go from 10% or 20% down to 5%. Fine. We're still making 5%. It's great. And we can do that 100 times a day. It's real money. Yeah. So now what happened is we get into this new world, this tweet world that we're in. And it's not just the president, by the way. My worst day ever, I lost $94,000 because this silly unpaid intern at the Department of Energy was playing Candy Crush on his phone, looked up, saw a thing in CNN, on a thing, not even someone talking, a thing that goes across the bottom said the U.S. Navy just put a ship to the Strait of Hormuz. He texts it out because he's in charge of the tweets for the Department of Energy secretary, and he tweets it out, boat, Navy through the strait, market goes up 500 points, 500 points up. I don't think it was anything bad in his heart. He just said that. So I get punched out on all the call sites. Dang it. Nick's, it's 50, it's 60% of the time. Okay, that's fine. Well, then some gal comes in, nice gal. She says, hey, buddy, that ain't true. He's like, what? Does that make a big difference? Yeah, it makes a big difference. Not to the Department of Energy, but to the entire stock market. And so and that was at 10:01. So at 2:01, whoa, there goes another one. I hope you're watching these. I know I talk too much. So at 10:01, they tweet out that was not true. The market goes down 500 points. Now I get punched out on the call side. So when those big ones come, what happens is it doesn't just go $6. It's trading at $4, $4.80, $4.90, $5, $22. And if you got a market order in there on that tick that goes to $22, you get filled at $22. And if you're the first one in line, you get filled.
You get it. You're the lucky one that got.
You're the lucky loser. You are hosed big time. And a lot of times they'll go 22 and they'll come back to 10. It's still bad, but it'll go like that. Or what did we look at on Wednesday, Nick? It went from $4 to $75 in the last second. 3:59 and 59 seconds. If you ever watch at 3:15, Tyler, my son, he's always negative Nelly saying, wait till the last minute. Last minute's always when we get killed. Last minute. Even hid with 30 seconds to go. He said, well, I can't be negative Nelly today. We're up 37 grand. Nothing can happen now. But he came to me the next day and said, I'm so sorry I posted that because I was the kiss of death. I said, Tyler, I'm sure the market didn't know. Yeah. But Nick and I looked at it. It went right. I think I'm quoting it right, Nick, right? $4 to 75 and one.
Yeah. There was a fill at 75. I think actually a lot of those ended up getting busted. So,
right. That's a risk, right? It's a risk. Yes. And if you're trading 0DTE SPX and you're trying to follow what I'm doing, remember Simon says you can and will lose all your money. There's a lot of risk most people don't understand. You need to ameliorate. I had a speech impediment as a child, so some words are hard for me to say, like
mitigate.
Mitigate. I can say Amelia, but I can't say ameliorate.
Mitigate.
No,
mitigate.
It's called ameliorate. It's mitigate. It's a synonym, right?
Okay.
I'm a big believer in synonyms, but not cinnamon.
Not cinnamon.
I got a great story about.
Yeah, don't put the cinnamon in your iced tea here.
You ruined my bit. This is it. This is my cinnamon that I put in my iced tea this morning.
Did you put some in the iced tea by accident?
I did. This is cinnamon and this is cayenne pepper in our house. How can you tell them apart? Someone said, some smart ass this morning. Oh, I can't say that. Some smart Alex said, oh, color of the top, Rob. Yeah, well, I didn't know that. Right. And by the way,
how did it taste with the cinnamon? I feel like the cinnamon wouldn't be that bad of a.
It was good. So you think, okay, the tops are red and black, right? So which one is spicy?
The black. I've seen the cinnamon. I know the cinnamon.
Oh, okay. Well, you're right. I always thought the red would be.
You got the McCormick cinnamon there. No free ads, McCormick. You owe me $1.
Don't say that. I'm going to get a letter from YouTube.
Oh,
Here we go. Here they go.
The
cinnamon. Okay. So anyway, what am I talking? Okay. So but let's get back to serious business. So it is really, really critical that you don't put in market stops. I did it. Yes, I know people are going to say, well, Rob, I saw your thing on the screen and you did, what is it? 40,000 trades. And did you have any of them that got that, bad thing happen to you? No, I didn't. I got 3 and those got busted. And I didn't even know those happened that day. I got 3 of them.
Things change. You gotta adapt. That's okay.
It's a risk. It's a risk that you need to understand.
Okay, so now we got here. So we got all 4. All right. So we're bouncing back. We're back to where we were.
Yeah, this is. I think we hit all-time highs. It was just over. What did we lose? 15 grand yesterday. Yesterday was the all-time high. So yeah. I think it's really close. But when we were going down, the yellow is the zero DTEs, the blue is the crazy Ivan, and they really match. They support each other. I'm trying to see if I got. Let me see if I got look at 40,000 trades, and here is the zero DTEs. It can have a bad month, right? But remember, it's offset by these. And here's the crazy Ivan. But then if you look at the crazy Ivan mixed together, Maria's she wants me to have these nice. And I used to have where's the thing where it's combined?
Oil down 80 cents here at the lows of the session. E-minis and NASDAQ both in the red.
So here it is combined, and you see how it smooths out, right? Yeah. This is why I like to trade them both. This is why I trade these two things. This is my monthly profit. And I think I started this account at about $1.5 million. It's at about 3.2 million-ish. I think I added a couple $100 grand in there, took some money and took somebody out, but about a net of 300 or 400 grand. So it's still, it's up $1.3 million. It's not doubled, but it's gone, it's great. It's done great. And I can't say enough good things about it. And it's all because I track my risk. That 2% thing, that's the that's the most I'm willing to lose. And so now, if you want to trade like me, just go to Math Makes Money, sign up for the thing. We close down July.
Coming soon.
But get on the wait list. I sent out an email. I think we had, I don't know how many people on the wait list. I sent something out last night. We sent out a little video. And what will happen is we'll get you on the wait list. And then if you're interested, we'll give you all the details. It's coming soon, like Nick says. Coming soon. But the idea is you can trade like me.
What are we looking like today? And then we'll get to a couple more questions. What are our trades? Are they moving yet?
Sure. Let's see how we are doing.
Let's get to the main account.
We are up $2.50 in all accounts combined. Oh, there's 52. Now 127.
Oh.
Here we go. My grandpa used to be an auctioneer. Now 112. Now 112.50. Now 125.
These days,
now 102.
A lot of the trades, so the down moves are actually a little bit better for your trading because you get that intraday volatility, which is priced into those options. So the options, you're able to sell them further out of the money, and also just because you have that put skew, typically your puts are further out of the money. So the inside down moves are really the better occurrences versus like an inside up move where your calls tend to be closer at the money, especially when volatility is low. So this sort of what is happening today is kind of moving in the direction that would be best for you. Death Sneeze out here asking for, have you ever thought about stopping or starting, Phil, at an hour in and out an hour from, like the end of the day, kind of removing kind of the most dramatic parts of the session? Usually the open and the close are the most active, kind of widest range usually.
I'll tell you what, Death Sneeze, I love the way you're thinking. My answer almost always is the same when someone asks me, have you tried this? Either it is, yes, I have, and I've back tested it, and let me give you the results.
Yeah.
And or no, I haven't thought about that trade, but I'm going to start back testing it now. I think I set the world record for myself. I like to keep I call personal record a world record because the world revolves around me. If you ask me,
of course,
that's how I look at the world. It's terrible. I'm a terrible person. I know I'm a terrible person. I'm really
it's not true.
First thing is recognize you have a problem. I get it. I got a problem.
Yes.
So what I like to do is I look at all these things. So what we do is we look at there's 390 trading minutes in a day, right? So then we look at price targets. We look at wing widths. We look at stop losses. We look at profit targets. And then we look at multiple strategies: opening range breakout, reverse iron condors, double calendars, jade lizards, tight limping
You name
back.
it. We've looked at
it. You give it a name. I've looked at it, right?
Yes.
Exponential moving average, the 20 versus the 40, the 10 versus the 5, the 60, the VWAP, the RSI, you name it. We back tested it and we keep back testing it. And remember, all of this has to be redone. So then you look back 3 months, 6 months, 12 months, over and over, comparing these things. And you have a whole bunch of, there's more people in my family trading that.
I think that was a Maria ding. That sounded like a Maria ding.
GRNC, she's trading. I have no idea. That's Generac.
GRNC.
I don't know which way she's going on that, but she's making a move.
GNRC.
She got a fill. Yeah, GNRC. It's got
$6. That's a good move for her. She's been long. I think she's been long there.
I think she's been long in that too. So
that's a good move.
She kills it. She's been running her own account as a former banker. She made $4 million her first year trading options, and that was with only 1.6 million in starting capital. So she made about 5.5, but lost $1.5 million in 1 month and said, okay, that's enough of that.
No, you have that experience and you say, okay, I understand the risk now. I get it.
Now we get it. And a lot of that loss was due to me, not due to her. So we now have a new rule, and that is that I do not mess with her account. Nice. And Tyler's got his own account. We don't mess with each other's account. Although the other day, Tyler accidentally did a trade in Maria's account, and that was not taken well.
Oh, did it work out?
I think it must have, because the discussion ended pretty abruptly. So that probably worked out, but that didn't satisfy her much. She wants to make sure that we trade our own accounts, and I do too, right? Because you keep track of all that stuff, and we all look at our P&L, and you look at it and say, well, that was someone else messed me up.
Yeah, where did that come from?
I want to own it myself. Where did that come from? So what was I talking about? I forget. So I want you guys to be very, very sure of what this risk is that you're taking. There's a lot more risk than people realize. When the crazy Ivans come out, Nick has pointed out to me that each one is worth about $650,000
just from a notional value, but they'll never get there. But that's how much, a lot of people don't think about the size of the product that they're trading. They just look at the buying power and they say, okay, well, it only uses $10,000 in buying power. No problem. I'll do, 10 of these per 100,000. And that is like your returns. The other side of the coin is like your returns. When you look at your chart of the crazy Ivans, your return is as if you have been trading, $10 to $15 million in cash in that product. Like your return on the crazy Ivans is probably, 650,000, something like that. I mean, for you to get that return,
look at you. You called it within $8,000. That's it. Yeah.
So, I mean, just to give like rough numbers, the NASDAQ, where did we open the year? We opened,
the somewhere SPX is that dotted line. The dotted line is SPX.
Yeah, that's. So we'll just do the math here. The NASDAQ opened at like 26,000. So it's up, we'll call it like 15% on the year. What would you have to have in cash to make $650,000 at a 15% return? If you had $1 million, a 15% return is, $150,000. So you needed $6 million in cash to make what you made here on your crazy Ivans. And you're not trading $6 million in cash. You're trading $300,000 in cash.
Yeah,
and so you have to understand that the position, the worst part about the position and the best part are the leverage. You have the leverage to make returns as if your account is 3 times the size of that it is. And that doesn't even include the cash that you're putting to SPX. Like we're just talking cash. You bought $6 million worth of the Qs and you made $650,000 this year. That's that's how much you made. You don't have $6 million in the Qs. You have $300,000. And so the key is you don't want that to blow up. That's the key. You can't be a greedy pig, and you're in the perfect spot. People get caught with the size of these positions and they say, oh, well, it's small enough to hold, 1 or 2 of these per 100,000. Once you get past that, you're getting too big and you're too leveraged, and you don't need the returns don't justify the risk of you going to zero, because then you can't keep playing the game. You need to keep playing the game.
I went to one of the top law schools in the world, University of Southern California, 7,000 applicants for 100 positions. And our professor, who talked in criminal law, said, the important rule to understand about, and the tax law, same thing they said. Pigs get fat and hogs get slaughtered. Now, I know you went to the county fair this weekend. You saw pigs and hogs. I don't know.
I saw some really big pigs, and
they were sure weren't hogs? Do you know if they were hogs or were they pigs, or do you know the difference? Because most people don't. If you don't know the difference,
I don't know the difference. These were pigs. These were pigs. These were food. They're pink.
No.
They were hogs then.
Well, okay. Sometimes hogs are.
They were big and hairy, and yeah, you know.
Yeah, pigs don't have pig. You know, the reason why they get down in the mud is not because they're one of the cleanest animals in the world. That's how they cool themselves off. Pigs are one of the smartest. A lot of my friends in farms have pigs come in the house, are very clean. They're pets, very, very pets. A lot of the FFA kids, the Future Farmers America, they don't have cows as, pets. They have horses. Horses are expensive, and you don't want a horse in the house.
Yeah,
but pig can be potty trained. It will go outside. It will sit at the door and go outside. And they love dogs and cats, and they don't eat them or anything like that. They're great.
Yeah.
But in law school, what they used to say is, Mr. Helmick, you need to be aware that pigs get fat and hogs get slaughtered. And what they do in the tax code or in the criminal code is, if you get close to the line, they just move the line, and all of a sudden you're on the wrong side of the line. So you got to be really careful when you're dealing with taxes or criminal matters. First of all, always tell the truth. My dad said, Rob, you're too dumb to lie. Just tell the truth. It's a lot easier to remember. And then what you want to do when it comes to trading, see, I could tie any story back to trading. In trading, you never want to get close to the line. You want to be way fair to the line. People say, but you, Rob, you made $650,000. You could have made a lot. You only used 20% of your buying power. You could have made double that if you just would have used 40% of your buying power. Yes, I could have. I could have also lost it all.
Yeah, and if it went the other way, then you're out. And that's, Donald kind of reiterating what I was just saying. And I know I've said it like a million times about the leverage and keeping size in check. In our group, I've built this calculator, and I've done all these things to kind of just because right now it's hard to think about because it's been so good. We have had, it's been straight up. But when the S hits the fan, then everybody will come all at once and be like, what do I do now? And it'll be, it's good to have this sort of reminder. And the, trading and leverage that you get, you are never missing out on capital. If you are trading in a leveraged portfolio, most of the time you are probably 3 or 4x leverage to what your cash value is. And that is what most people in a 401k, they are cash secured. Their whole, you got 100 grand, it's 100 grand in the S&P 500, and the S&P 500 goes up 1%, you make 1%. If it goes down 1%, you lose 1%. In a trading account, you can use 100 grand of $1 million and have the same notional exposure as that person that has $1 million in cash. And so you don't have to squeeze every penny out of everything.
Nope. Pigs get fat, hogs get slaughtered. And
that is right.
If you ask any farmer, they'll tell you, yep, that is exactly true. Pigs get fat and hogs get slaughtered. Now, the other thing I want you guys to think about is look at this chart. This is why I can go surfing and swimming every single day, and why I don't look at the charts. Look at this. Nothing burger. People, if I told you, you, okay, you're going to start at $1 million and 10 months later, after whatever it is, 202 trading days, you'll be at $1.6 million. Would you sign up for that? Everybody raises their hand. Yes.
Yeah.
Okay. Everybody. Yes. Now look at the drawdowns, Nick. I had one, right? One. And it wasn't even that big because I traded small. But look at this. Boring. And this is for me, this is the hardest part right here.
It's today. It's sitting here with nothing.
It's nothing.
It's the hardest part.
Day after day after day of nothing burger.
But then when something happens, you're going to be like, oh yeah, now I'm ready to rock.
Look at these things, right? These things have been on for how long? I mean, I put this one on only because otherwise I wouldn't even have any. I put this one on by mistake, right?
Yeah.
By mistake. And by the way, I got my 25% in here. It was at 22.1%. I got to tell you, I took it off, and then I was afraid that Maria would rat me out to you. So I put it back on at 20%.
That's okay. Hey, you could take it quicker. I look at this market and I say, you are not, for those sort of trades, I don't think you are getting paid what you should be to take that sort of risk. And we even talked about this a little bit yesterday. Like those crazy Ivans that you were selling a month ago that were at the 25,000 strike. I know we're looking at the end of the year contract, the Z contract that expires in December. So it's a couple, it's trading legit at 30,000 right now on the dot. It hasn't even moved. That's how little volume, little volatility we have in this market right now. It has gone nowhere. So it's a little bit higher, but you were trading the 25,000 strike for 250 points, which is about $5,000 in premium, 40 days out in time or 50 days out in time last month. Right now, 66 days out in time, that same strike, even if you moved it 300 points up to the 25.50, 25.5, it's trading at 150 ticks. It's at half of the premium that you were selling these 30 days ago. And has anything changed?
No.
In 30 days? All that's changed.
We've won the war a couple times, I think, and we lost the war a couple times.
It's all the same. It's the same thing that's been happening for the last 6 months. And so right now, all I look at is the market is at higher prices and you are getting paid less to take downside risk. That's not what I want. I want the market to be down or flat and be getting paid the same amount, if not more, to take that same risk. And
I agree.
That's how you got to just separate. And again, you already made, like if you take the next 3 months off, you made 4 or 5x, your capital.
Yeah, it's crazy. It's a crazy Ivan. I mean, that's the whole thing. But if you ask me right now, Rob, how's it going? Oh, I haven't made a trade in forever on these crazy Ivans. I mean, Phil does all my SPX. I don't get to make any trades. I'm a trading addict. I want to make some trades. I haven't made them forever. And you would say, okay, let's take a look at the sheet and really see. Okay, that's not true. You made one 4 days ago, buddy. 4 days ago is not a lifetime. It feels like a lifetime. It feels like forever, right? Forever.
But this is when people get caught, Rob. People get caught when you're in this chop. Like this is the worst market to trade it. Like this last week or so has been the worst market for bulls and bears, because most people are trading very directional, buying calls, buying puts, scalping. That's the sort of thing that they're doing. This is where the market humbles those sort of people. Like, oh yeah, you had a Super Bowl, 3 days of just face ripper rally. And this is the week where everybody goes, okay, now I'm doubling down because, I'm a genius. And this is where the market takes it all back. And it's the same thing with the crazy Ivans. This week is when people start to get itchy fingers and, they got to put something on. You can't get caught in that. Can't get caught in it.
And you remember last week, Phil made 93 grand, right?
Yeah.
The month before that, he lost 140. People were in a panic. And I say, well, wait, the month before that, he made 150. The month before that, he made 176. The month before that, he made 101. So it's and you're talking about 22 days, right? If you're talking about flipping a coin, you'd say, well, 22, I don't want 22 flips. I want 1,000 flips, right? I want 40,000 flips. That's what I got, 40,000 flips. And then I say, I'm so bored. I haven't done any trades. And then someone say, okay, you haven't done any trades. Out of curiosity, how many of these crazy Ivan bad boys have you done in the last 30 calendar days, last 22 trading days? And you say, oh, I'd say hardly any. And then I say, oh, wait a minute. What? Wait, hold on a second. This is the list? 30 days? This is the list of just the NQU6s? This is the list? Wait, what? Wait, what? How many? Sell to open, sell to open, sell to open, sell to open, sell to open. Then I'm all in the 200s. Then I'm buying them to close. When we were really cooking on 713, I'm selling to open, and on 714 I'm buying to close, and then it's more and more and more, and I'm still down at the bottom of the list. Nick, look at these things. It's every day. It's tons of them back and forth and back and forth.
It's good. It's good, Rob. That's
25% winner. 25% winner in 2-3 days. Boomity, 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 boomity. Look, I'm still going. This is crazy.
Perfect.
My finger hurts. My finger hurts from pushing it so far. And so then I go back and I say, well, look back at this. So boring. Look at that. So boring.
It's all right.
So this is when I'm going up and trading all those things, and then boring. And now this is it. Look, I'm bored out of my mind. You gotta talk me down. You gotta talk me down.
The better half has come in to tell you to just chill. sit and wait, gather the dry powder.
There she is.
She knows tomorrow the market's going to open again. And next week, the market's going to open again. And a month from now, the market's going to be open. And there's no rush. It's okay.
What made Maria the number one female house flipper in the United States was that she didn't buy houses. And people would say, I don't understand what you're talking about. She buys 300. I used to have to buy and sell for her a house every single day. Buy and 302 houses a day. It's a year, 302 houses a year on average. So that means I had to buy one and sell one for her every single day. I don't have time to negotiate. I'm not negotiating.
Yeah.
This is a price, right?
Mm-hmm.
And she would not buy houses all the time. And I said, why didn't you buy this house? That was a great deal. She said, no, I'm not looking for a great deal. I'm looking for a spectacular deal. I'm looking for a deal that I can make money on. I will make money. I understand that, but we have limited capital. So let's put the money to work as best we can. That's why when you look at our trading, she buys a lot less crazy Ivans. Like I'll go on a 300-point down day.
Sells them.
Excuse me. I always don't. I know
one
what
day
I'm doing.
I just don't know.
I
know it's just muscle memory at this point.
Well, I get too excited when my mind goes way faster than my mouth. That's the problem. My mind goes faster than my mouth. So I open the trade and it goes down 300, and I like to get in a trade because I'm an addict. I gotta get in a trade, and I'll put on 30 or 40 of them. And Maria's like, no. That's not good enough for me. If it's down 300, I might wait for it to go down 500, and she gets in. And she kills it, right? Because that's why
she says it much more eloquently. She says, you make the money when you buy the house.
That's correct.
You don't make the money when you sell the house. Okay. You make it when you buy it. You have to have a good entry point.
That's exactly right. And she would, every time that she did it, right? Tyler and I are like, man, we should have bought that house. Every day we come back from the auction. We should have bought that. That was a great deal. That was great. She's like, no, not good enough for me.
Not yet. I love it.
And
I love it.
We used to lose like on 1 out of 4 houses, we would lose money. When she started taking over the acquisitions, it was 1 out of 7, 1 out of 10, which really, it really changed the mathematics. And you think, again, I can apply anything to trading, apply the same knowledge to the same thing to trading. Maria does a lot fewer crazy Ivans. Hers make a lot more money. I get out at 25%. She's like 50 minimum. I'd say 50, you can't get 50. And she says, no, you can't get 50. I can get 50 because I got in real low, right?
Yeah.
If you ever talk about, basically, it's if you really want to translate, it's buy the dip or buy the extreme dip. And she did the same thing in flipping houses. So it's like, if you take gambling and you take casino games, right? They call it gaming. If you take gaming or house flipping, it's the same thing as trading. It's all about the entry, right? It's all about the entry and then managing your lose. Like Dr. Jim used to always say, it's easy to manage the winners, right? That's easy. And it's hard to manage the dance floor because in your mind, it's mentally it's tough. And then the losers, that's where the rubber meets the road. And I stress enough. One thing you've brought to my attention, Nick, is let's look at the parade of horribles today before it starts to rain. Let's look at the hurricane. What are we going to do in a hurricane in Iowa? What are we going to do in a tornado? You plan for it today when it's nice and sunny out. Yes. And that means when the market's up huge, I used to sit back and go surfing. You say, well, okay, you can go surfing, but before you do, I want you to buy some hedges. I said, why? The market's up. It's sunshine. It's rainbows. It's lollipops.
It's okay. It cost you a couple bucks, but
that day's not over. As Maria said, and it's $57 a day.
It's not just the one trade, Rob. It's the mechanics. Right. It's understanding.
And Nick, what is 5 times 650? Because that's the notional value of protection that you bought me, which is, for you mathematicians out there, I'm going to say it's $3 million-ish, right? Yeah. For $57 a day, I got $3 million of insurance.
You're okay.
All day, I take that. All day. Why wouldn't
I love it.
Why wouldn't
Shout out to JW the Elder. The live stream is criminally underrated and underliked. Appreciate you. Please give us a like and subscribe if you've enjoyed this content. Rob, I think we've gone over our time limit. What do you think we take a quick little 90-second break? We'll come back and do this at the end of the day today.
That sounds great. Before we do, can I, there it is. Boom.
Mathmakesmoney.com.
Yeah, Math Makes Money. That Trading Act newsletter, if you haven't read it, it is hilarious. And there's some nice trades in there from Phil the Robot. But Maria's got the ones that
Make you the real money.
The
real money makers.
And you need to read the newsletter. She doesn't just like the stated before, like the MU one she was 10 days ahead. And that one was like, that alone would pay for, well, the newsletter is free, so it doesn't matter. I was going to say pay for the newsletter. But yeah. If you follow that newsletter, you know what your life is going to be like?
Oh, like Rob's. And Rob's is a good life, let me tell you.
Oh, I'm supposed to take this thing. Hold on. It's supposed to be like that.
There you go.
Five at everybody. High five. Give me a high five, chat. High five. All right. That's good enough.
We're taking you out. We'll see you at the end of the day today at 3:15.
3:15, Monday through Friday. You guys have a great trading.